Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's equity analysts as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future.
Hello and welcome to Different Makes a Difference. I'm Stephen Boland. In recent years, you've probably noticed more electric vehicles on the road. There's certainly still a lot more that are powered by gas or diesel, but electric vehicles are gaining share. And despite some recent pushback on the industry, it's probably a trend that continues. When I asked today's guest what he wanted to talk about, he suggested lithium. It's a key component in electric vehicles, and he sees good upside potential in the coming years. So with us today is Odlum Brown's resource analyst, Fai Lee. Welcome, Fai.
Thanks, Steve.
So before we get into the outlook for lithium and talk about your favorite lithium company, let's set the table with some background. What is lithium, and why is it a key component of electric vehicles?
Sure. Well, I'll start with the first part of your question. What is lithium? At its basic definition, lithium is a chemical element, atomic number 3 on the periodic table, fun fact. And lithium has a wide number of uses, including for medicine. It's used for bipolar disorder, treatment of that. In fact, if you remember the song Lithium by Nirvana, that's kind of the reference to that. It's also used in ceramics, but these days, really the vast majority of lithium is used for electric vehicle batteries. And that accounts for the vast majority, probably over 85%, and the number keeps creeping up as demand for electric vehicles grows and lithium battery grows. Lithium is known for being light. It's also very conductive of electricity. Why that's important is because that helps determine the range and how much energy a battery can store. So right now, it's probably the ideal material to be used for batteries. And you can use other materials, but they might be heavier or more costly, or there's always these trade-offs. And right now, lithium is kind of in that sweet spot.
You say right now, could that change in time?
You never know, but there are certain things that you can't change in terms of the lightness of the material. For example, people have talked about using sodium-ion batteries as a replacement. And why that may be is because it could be cheaper when lithium prices are really high, but sodium-ion batteries are heavier. So you could use lead, but the fact that lead's heavy will never change.
Right.
But the technologies, in terms of how much lithium you can use, can you be more efficient? In some cases, you might need more, because if you move to solid-state batteries, getting a little into the weeds here, but the technology is constantly evolving. But one of the reasons why I originally was attracted to lithium was it seemed to be, at least in the foreseeable future, the core material that's going to be needed for EV batteries.
Okay, so it's the optimal material, like you say, for as far as the eye can see.
Yeah, I'll give you an example. A few years ago, what was really popular and everybody thought was going to be the battery of the future was going to be like nickel, manganese, cobalt batteries, so NMC. And we had a shortage of cobalt, a shortage of nickel, and prices spiked, and everyone was really interested in investing in those types of materials. But right now, there's been a switch. We've kind of moved to what's called lithium phosphate batteries. And those batteries don't use nickel or cobalt. And so what people thought would be the battery material that everyone would require is kind of morphed now.
Interesting.
But underlying of it, you still need lithium.
The lithium's been there the whole time.
Yeah.
Interesting. Where does lithium come from?
In terms of, I guess there's two parts to that question. One is in terms of countries. Australia is the largest producer of lithium. That's followed by Chile and China. And in Australia, they actually mine it from a rock called spodumene. And in Chile, it comes from brines, salt brines. So those are two of the primary sources. But in China, it's also been coming from a material called lepidolite. And that's sort of another source.
Is there a lot of lithium out there? I've read about deposits in Serbia, deposits in the US. There's a lot of salt water. Does that mean there could be a lot of lithium?
Factually, yes, there's a lot of lithium. It's very abundant. But I always kind of the analogy I use is it's like saying, okay, When people have water shortages, you say, well, the Earth is covered mostly in water. Like, why do you have a water shortage? But it's kind of a bit like that for lithium. It's just really a question of, is it economic to mine it? Is it economic to extract it from seawater? And in most cases, it's not, because then that's why you end up with these three countries like, Australia, Chile, and China accounting for 90% of production. And there's economic reasons behind that.
And the economic reasons, that's a good segue into my next question, which is, what do you like about lithium from an investment perspective?
The way I think about it is, and I kind of wrote a piece on this back in 2023, is the way I kind of looking at what I call energy transition materials is there's two parts to this. One is there's a secular story. And what I mean by secular is that I think we all acknowledge that we have a problem with, greenhouse gases and global warming, and we're trying to find solutions. And transitioning to electric vehicles is viewed as part of that solution. So that's positive in terms of demand. So that's secular demand going forward. And I think over the next decade or 2 decades or even beyond that, that's going to continue to be a problem. So I think there's always going to be demand, in terms of demand for things that can help provide a solution in terms of addressing those issues, the greenhouse global warming issues. So that's the secular story. Around that is also, with commodities, you always have to think about the cyclical. And what cyclical means is that you always have periods over time where you may have excess supply and you have insufficient supply. And that's versus demand. And around that, you'll get prices either spiking, when there's not enough supply, or they'll be low when there's too much supply. And the ideal time, usually, when you think about from a cyclical standpoint, is to buy when they're out of favor, when the prices are low, people are not that interested, and that's when they're at cyclical troughs. And right now, I think lithium is very unique in that the commodity is in a cyclical trough, but it still has a very positive, long-term story. So I think the combination of the two make it kind of unique in that, from an investment perspective, it's very unusual for people to be able to capture both a cyclical low with a positive secular story.
I think let's dig into each of those a little bit more. Just first on the secular story around the growth of electric vehicles. What does the electric vehicle market look like today? How many new vehicles being sold are electric? How fast is that pace of growth? How does it look different geographically?
Well, I think right now, this year, we're probably on pace to sell maybe globally around a little over 20 million electric vehicles. I think that's the number I've seen. And in terms of global auto sales, you're probably looking somewhere in the range of 80 million, somewhere in that range. So ballpark number is probably about a quarter, 1 in every 4 cars these days being sold as electric vehicles. But a lot of that is actually happening in China and in Europe. Those are the 2 biggest growth markets for electric vehicles. A little less so in North America, just that has demand in North America has slowed down. But so we don't see it as much here, but certainly in places like China, electric vehicles are definitely growing rapidly. In terms of growth, the number I saw for the first half of the year is roughly rounded about 30%. And most of that is from China and Europe, with North America growth a little slower, around 4% is the number I saw for the first half.
It's interesting because I'm sure we've all seen the headlines about incentives being cut back in Canada and the US, and the Donald Trump administration seems a little less friendly toward EVs and perhaps a little more skeptical of greenhouse warming and such. So what you're saying is there's still lots of growth even without the United States driving that growth right now.
Yeah, there definitely is. As I said, EV sales have grown 30% in the first year over year in the first half of 2025. But it's also important to understand, within even the U.S. market, a lot of that slowdown in growth is really revolves around Tesla, which has had its issues. I think everybody can kind of gather what those issues might be if you're through the headlines. But they've actually had, their sales growth has really sharply dropped. But companies like GM have made good progress. Like their sales in second quarter were up over, the number I think they said was 111% year over year. So even within a market like the US, there is growth. It's just, but it's kind of a bit masked because of what's going on with Tesla right now.
Right. Interesting. Over the next 5-10 years plus, we're going to see that growth continue in the United States, I assume?
I believe so. I think in terms of subsidies, I think subsidies help in terms of accelerating demand and maybe pulling it forward. But I think at the end of the day, we ultimately need electric vehicles to stand on their own. I think as the technology and batteries improves, as costs come down, as scale increases, the costs are naturally going to just come down over time. And there's a lot of advantages in terms of electric vehicles, in terms of what they can do versus like a gasoline fueled vehicle, internal combustion engine vehicle. So I think over time, I think they're just going to become more and more popular. And people that do own electric vehicles seem to be very happy with the product. So I think there is tremendous room for growth over the long term.
Yeah, I've seen some videos out of China and the electric vehicles over there, and some really, really impressive looking vehicles. Their range is pretty good. Some of the features in the cars are quite impressive, and companies like BYD and some other names, which I probably have a little bit more trouble pronouncing, they've really had great success in the EV market. Let's turn to the supply side. And you mentioned that we're kind of in a cyclical trough right now. You've been following lithium for some time, and we'll get to your favorite company in a bit, but you've talked about this company for some time as well. I know when you first kind of got into it, shortly thereafter, lithium and the stock kind of ran up a lot, but the last, year or so, it's been pretty tough sledding. When I pulled up a chart earlier, correct me if I'm wrong here, but lithium prices per ton were about $70,000 not that long ago, and more recently they were below $10,000. So maybe can you just speak to what has gone on behind the lithium price recently?
Yeah. So to think about the price today, you have to actually kind of roll back to, when the prices were at all-time highs. And that was kind of back around 2021, 2022 period. And at that time, I saw a chart recently that demand growth in 2021 was lithium demand was up year over year by 74%. But at that time, the forecast, and everyone was looking at the projections, well, if this continues, it wasn't hard to imagine that, there was going to be a shortage of lithium. And so recognizing this trend, and even back then, we had a strong secular demand outlook. And that's still the case today. So what happened was, as prices spiked, you end up getting producers saying, okay, well, we can make a lot of money here and get a really good return and by investing and bringing on new supply. So a lot of investment was made back then, but what changed was there was a bit of dramatic slowdown in demand in China, which is the biggest market for lithium and electric vehicles. And it's come down, but it's still growing at around 30%, but not where it was back in 2021. But that change in demand suddenly created an imbalance. You had the supply that was already being built or going to get built and that was being brought online. In anticipation, demand will be a lot higher than 30%. But it's slowed down. It's still growing at a very good rate, but there is too much supply. And this supply was really built around the idea that we need a lot more lithium. I think that idea that we'll need a lot more lithium is still going to come. It's being pushed out now. One of the beauties why I've kind of liked lithium is because if you look at a lot of other commodities, they grow at year over year, 3 to 5%. And every commodity will run into these problems. You get periods of excess supply and periods of not enough supply. The difference is that when you have too much supply for other commodities, if you're only growing demand at 3 to 5%, it can take a long time for you to dig yourself out of that hole when you have oversupply. With lithium, if it continues to grow at 30% and people have already cut back spending and investing, then I don't think it's going to take as long in terms of this bear cycle, if you want to call it.
So it's the typical commodity cycle, which you've seen in many commodities over your career playing out. And usually the optimal time to buy is when you're at the trough of the cycle.
Yeah, that's exactly right. But on top of it, the one thing that you don't see with other commodities is lithium demand is growing a lot faster than anything else I've ever seen before, which means that the cycle should, in theory, be a lot shorter.
And how is supply reacting? What gives you confidence that the supply situation is going to get better?
Well, we've had companies even like Albemarle are cutting back spending, and we've had other companies, have announced that they're not investing as much. In the short term, you've also heard stories, it's hard to prove, but you hear that numbers that get thrown around, like 40% of the current producers are not making money at the current price. So all of that's a huge disincentive. But the simplest, way to look at that is if you look at the price. The price is, as you mentioned, it's quite low compared to where it was. And usually the saying in the commodities goes is the cure for low prices is low prices. And that's just what that means, is that people are just going to not bring on as much supply because prices are low.
So that sounds really interesting. We're seeing some supply response. I know lithium prices have begun to rally recently, and some of the stocks have started to move up as well, which I think is starting to reflect some of that supply side. You mentioned the other day that there is, I believe it was a Chinese mine, maybe coming offline as well. Is that the case?
Yeah, well, that's part of the story. In China, there was a recent story of a company, I can't remember the name of the company off the top of my head, but they were ordered to shut down their mine for environmental reasons. But there's also been stories of that, maybe speculation is the word, might be the right word, is that the Chinese government might be looking at these industries where they have seen a lot of price competition, that companies are losing money, the markets are getting oversupplied, and trying to bring back some discipline in those markets. And I think lithium has been part of what the government might be looking at, possibly, just given, it is being oversupplied basically by unprofitable companies. And so what we've seen is pricing in China, in terms of lithium prices, they have bounced back from the lows. I think they were around $8,000 per ton, and now they're in the mid 9,000s. And that's over a span of only about 2 or 3 weeks.
Okay. So it's moving pretty quick. So it sounds like a pretty positive backdrop. You've got lots of long-term growth and demand for the commodity. The supply response is starting to happen. So good backdrop potentially for lithium companies and lithium stocks. Let's move to your favorite stock in this space. You referenced it earlier. It's Albemarle. Tell us a little bit about Albemarle and why you like that particular company and stock.
As you've mentioned, I've been following Albemarle for quite a while, and it's always been a leading producer of lithium. And it has access to low-cost, long-life reserves. And generally, when I'm looking for commodity companies in terms of the characteristics, those are really 2 key characteristics I really find important, because during periods like we see now, if you're a high-cost producer, you can end up bleeding a lot of cash, and that's never good. And so you want to be the low-cost producer. You want to be basically the last company standing. And that's just by being the lowest cost producer. And in terms of the valuation, it's a little math because earnings are very low. But the valuation, based on my view of where prices will be over the longer term, I think it's very attractively valued.
Okay, well, that sounds really good. And it's always nice to be with the low-cost producer or one of the low-cost producers in an industry. I think that's quite important. It's one of those quality metrics that we look for. Let's turn to some other commodities. There's more than lithium in electric vehicles. There's copper, there's cobalt, there's nickel, there's graphite. Why have you kind of leaned toward lithium as opposed to some of these other commodities?
Yeah. Well, the first question you asked me, and in terms of address part of it, but let's talk about 3 of them. Let's talk about copper, let's talk about nickel, and let's talk about cobalt, right? And so the nickel and cobalt, basically, as I mentioned, it's because one thing I've recognized for a while is that battery chemistries can change. And it's always about trade-offs. And why were those popular? Well, one of the big concerns people have about EVs is range, right? And driving anxiety. They want a car that can give you lots of range. And those NMC batteries, nickel, manganese, cobalt batteries, they have very high energy density, which means that they can store a lot of energy and it gives you lots of driving range. But there's a trade-off. Nickel and cobalt are expensive, right? And so when the prices spiked, the battery manufacturers started thinking, oh, okay, well, maybe range isn't as important as cost, right? So they switched to LFP, which is lithium iron phosphate batteries. So you're constantly making these little trade-offs. Like, do you want more driving range? Well, are you willing to pay for it? Do you want lower costs? Do you want something that lasts longer? Or are you willing to trade that off for something else, right? And you're constantly making these trade-offs. But among all these trade-offs, the one thing that always seems central to me when I'm looking at the battery technology is everybody seems to be basing it on some lithium-type battery. Even solid-state batteries are based off lithium. And then, as I mentioned, you can move to something like sodium batteries, but the trade-off is that the amount of energy it can store is less, right? And they're heavier. So you're making trade-offs. And maybe in a place like if you're living in a city, maybe range isn't that important if you're only driving around the city. But as I said, the lithium, from what I could see over the next decade or foreseeable future, that lithium still was going to be very important. And even today, nothing suggests to me that that's changed. But let's talk about copper. Like, that's another material. When you hear about why people are excited about copper, they talk about, oh, well, EVs need a lot of copper. They use a lot more copper than regular vehicles. So we're going to need a lot of copper, and that's going to drive copper demand. And at the same time, by the 2030s, supply isn't going to catch up. You're going to get some super cycle in copper. And that's kind of part of it. And, there's other things. We're going to need to upgrade the grid or, use some for AI and data centers. But there's this positive secular trend that's undeniable, I think, for copper. What's different about copper, though, it's hard to say that they are at cyclical troughs. Like, they're not at their all-time lows. They're not anywhere close to their all-time lows, and they're all riding high. So to me, that means that it's just a lot of good news, which is already priced into the stock. But same story, you're banking on something to improve by the 2030s, that time frame, and be really good, but you're already paying up for it now. Whereas I think lithium, as I said, is quite unique in that I got this great story. I just have to wait till that time period. It's very similar to copper in terms of that time period, but I'm not paying for it.
Interesting. So better risk and return. And I should add, recently we picked up a coverage of a company called Finning, and part of the attraction of Finning is a Caterpillar distributor, has operations in Western Canada, in South America, and in the UK and Ireland. And part of the attraction was that it does have big exposure to copper. A lot of copper is mined in Chile, whereas, as Fai mentioned, a lot of copper stocks are reflecting a more optimistic outlook than lithium. Finning stock we found to be pretty inexpensive and a more attractive way to get exposure to that positive copper story that you talked about. I think the last thing I want to cover, Fai, since you cover a broad array of different resources, is oil. There's several oil companies that you like. A big use of oil goes into our vehicles as gasoline. In a world where electric vehicles are going to increase in share over time, what does that look like for the oil industry, and why do you still like oil companies in this world?
As you transition to electric vehicles, they will not be using gasoline, which comes from the final oil, but there's still going to be lots of plastic parts, so there's still going to be petrochemicals required to manufacture the plastic. But that's only a small part of it. So even then, even in an electric vehicle world, the demand for oil or natural gas doesn't always just go to zero because of the need to build the product with plastics. But the secular story over the longer term, I think what's going to happen is demand will slow down, and at some point it's going to flatten, and you might enter a period of decline. And that may be worrisome to some people. And 2018, I addressed this idea. Back then, everyone was saying, well, if this keeps growing at this rate, and you're going to end up seeing every car on the road, by 2025, which we're now, would probably be, a lot of them would be electric vehicles. But if you look around, that's not the case. I think the transition is going to happen. My view is, I think it's going to take longer than people might believe. And that's certainly being proven out to be true from 2018 to now. And particularly with what you've seen in the US with the removal of subsidies. And there's certainly, I think, the demand growth has slowed down. So I think that transition in the US is actually going to push this out a bit more. So that's on the demand side. But I think at some point, you're going to eventually flatline. But I think we're probably looking at a decade. At the same time, on the supply side, I think the idea of you drill a well and suddenly you're going to have oil and demand in the U.S., particularly the U.S., from shale, drilling shale oil wells, it's going to go up and up and up. Well, they've already started to slow down. They're reaching, kind of the limits. And it's always a balance with the oil will cost more and it may not be economic. That's the trade-off. But I think even if demand growth slows down, I think if supply growth slows down at the same time or kind of matches that slowdown, I think there could still be a long runway for oil. And the third thing, on top of it is that the valuations on the oil companies are still very attractive. They're generating lots of cash. Even if they stop production by 2040, they'll still generate a lot of cash between now and then. And that's not my view, but even if you just go out to that period, you're going to get your capital back, plus you'll get a pretty decent return.
Right. So we've got some good oil companies here in Canada. Ultimately, room for both lithium and oil in a portfolio. Like you say, there's lots of uses for oil. I heard recently that every time you get on a plane, your oil usage per individual goes up a lot because it's a big user of oil-based products, for example. And I think your point as well is interesting that the transition to electric vehicles has been relatively slow on a global basis. And we own some companies, Couche-Tard, which owns gas stations, and a company called Vontier, which makes equipment for gas stations. And these are a really profitable business. And maybe the Wall Street is worried a little bit about the longer term picture, but the reality is it's a very slow transition. And there's likely room for lots of oil and lots of lithium to come in the years ahead. So I really enjoyed that conversation, Fai. Thanks for being here. More people are driving electric vehicles. It's a trend that probably continues, and it should boost demand for lithium. Lithium prices have been under pressure, but that's usually part of the recipe for a rebound. Low prices tend to hold back supply, and increasing demand of lithium and tight supply is usually what you want to see when investing in commodities. We never know the exact timing or shape of the commodity cycle, which is all the more reason to participate through higher quality companies. In this case, we like Albemarle. So thank you everyone for listening. We hope you enjoyed the podcast. Certainly join us again, and we look forward to catching up soon. Thank you.
Thanks, Steve.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.